Welcome everybody, this is Mike Hamilton from Trade the Easy Way. I just want to step back and see where we think this market is going to go. We're looking at the Dow on the weekly chart because I thought this is one of the most telling charts out there. Well, obviously we'll look at the other indices in a second. But basically, are we bullish, are we bearish? Should you be holding stocks or should you be running for the hills and going into cash? At the moment, we are still firmly fixed in bullish territory. I think the reason why we're seeing increased volatility is we've got Fed rate decision, US rate decisions tomorrow, 2 hours before the US markets close, and then we've got Bank of England on Thursday. Last month, there was a great surprise that the Bank of England didn't raise rates last month. And this month we are seeing tapering coming in from the Fed at long last. So at the moment, technically, we have still this bullish trend line in place, and we're in a channel. And what we've done is we've had a 1, 2, 3 wave correction on the back of this 5-wave move. So after the 5 and 3 wave correction, you start from scratch. So at the end of this C wave, this corrective wave, we have had a big push back above this major resistance area here from the early summer. So we made a new high recently in the October period, and we've had this big bullish bar sit above this area last week. So at the moment, all we're doing is pulling back into this key area here. If we hold 35,400, 300 area into this week, we could start to leg it up to 36,700 up here in this extension. The only time to really think seriously about getting out is if we start to close under this 300 and then make a dash for these lower levels here. So at the moment the bulls still have it. We have a 5 and 3 wave move confirmed. Having completed that's completed. We've already had an initial impulse wave off of this support and this key 50-day average. So as long as this is a shallow pullback and we don't start closing under 300, that would be the new wave 2, and we could be about to experience the directional wave after this 1, 2, a potential 3 wave move. Alright, so that's the case for the bulls. The case for the bears is this turns out to be a massive head and shoulders. You have a shoulder, a head, and a shoulder. So the neckline, so the real sort of fire line, is pretty much the low from 2 weeks back. If I draw that more accurately, or you could argue, as I said, even a close under that 300, 35, 300 is going to be absolutely crucial, and that could see this market legging down back into this key support here around the 30,000 mark. Alright, so that would be, I think the path of least resistance at the moment is still in, like I said, into wave 3 to test this 700 area, but let's see what we get. Alright, that's a huge engulfing bar we had last week. Closed right above this key area from August, so that's a very, very bullish response to a drop to the 50-day average. That's the first time we tested the 50-day average since November 2020. Alright, so the first touch of a 50-day average is after a break and a massive run like that is normally a fade. In other words, it normally gets bought. A further test of that would see that weaken and then could see that pull back. In the meantime, yeah, like I said, that previous week's bar is very bullish. Right, let's rip through the other indices now. Nasdaq. Same story, big push up into resistance, close to the high of the channel here, at the moment pulling back into channel support. FTSE, 2 weeks higher closes, settling back into this 72.20, which was a key area in the sand yesterday, last week, sorry, and we're holding up, and all we're doing, so we could potentially come and find that we're not even gone back to pre-COVID levels on the FTSE. The pre-COVID high was 7,700, and we're 72.60. So that is as we stand at the moment, that is technically a very bullish chart. Let's make that quite clear. As we stand right now, that is very bullish. That could change if the daily chart closes under 72.20, even as close as that. We're only 72.60 now. End the week at 71.70, and this market has a problem. It's going to pull back. You're going to see a significant pullback, and we could end up at 6,700. We're above all the averages. Volume stacks up. The chart, last week's close, stacks up for the bulls. So just be careful. Right, I think this is what it's all about. This is the dollar on the weekly chart. Now, Fed tomorrow. So a rate rise, and if we do get rate rises, they're going to be 25 basis points. So it's still going to end up with a very low rate if we even get a rate rise. So you can see the 50% of this move is 76.50, and at the moment we're rejecting it. But obviously any decision to increase rates could see that break up. So we've got this squeeze pattern. Whichever way we fire out of that squeeze pattern is going to be the direction for the dollar. If the dollar drops, that will give the markets breathing space, the US markets in particular. That will give the markets breathing space to sustain those highs and potentially go back to the new time highs and make new highs. Right, quick look at gold. Gold is just, the strong dollar at the moment is capping it, and we are just sideways and under the averages. So at the moment the bears are in control. We had 2 heavy weeks of selling from the middle of November, and the inflation figure last week did not lift it. It did nothing for it. So if this livens up with the dollar, that's a sign of real run for safety. So only be worried if the dollar and the gold perks up. That's exactly what happened in 07-08, in the crisis in 07-08. Let's have a quick look at some Bellwether stocks. A note in the chat room about BT. BT's had a great move. It's just pulling back into this key average to give other people a chance at the moment. So obviously if we close the week like that, close the week under 165, that's bearish, because we completely engulfed and cancelled the bullish move from the previous week. As long as we can sit above if we sit above 170, I believe we can still move out. So again, in Elliott terms, you can see I've marked up a 5-wave move here. It's been a very drastic 3-wave correction. This tool sometimes doesn't work. I'll give it one more go. I'm trying to illustrate the 3-wave pullback. A, B, C. So when we're down here at 135, 134, we completed a C-wave move. We've now since made a 1, 2, and we are still potentially in wave 3, potentially. But that will be cancelled out if we close lower this week. And this goes for a lot of stocks. Let's go for Vodafone. And Vodafone is sitting up very, very nicely. Since November, we've only had 1 week of lower close. So we hesitated in the end of November, and then through December we picked up. So if any stage soon we close above 115, that might see us get in towards 130 plus next year. Let's look at this is ASOS. ASOS is struggling. Had a higher close last week on all this support, but we are struggling. We have seen 29.50 and we're currently 23.30. So that is right on the line. If we close lower this week, then that looks as if we can come and see 20. Volume last week was good, not brilliant. It was a higher close last week, so we're certainly holding up. The jury's out. So obviously there are some obvious concerns in this market, but at the moment I'm sitting tight. Overall, I'm sitting tight. Let's look at Rio. This is a good success story here in Rio. 48.75 is a major area of resistance. So at the moment I'm sitting in, these are stocks that I'm sitting in these stocks, just not taking new positions at the moment, considering taking more profit, more money off the table, just not doing any more than that. And one of the success stories is Pfizer. Been in and out of Pfizer a couple of times and currently looking for this to ride up further. Huge wave pattern, lovely wave pattern here. So 5-wave move, completed a 3-wave pullback. C wave started at 32.30 and here we are at 55.30 with a momentous. So we're still in wave 3. We're still potentially in wave 3 here, and I think that could go to 70. So any pullbacks into 48, if we see 47, 48, that's potentially a good pullback area if it does hesitate up here. Otherwise you may have, this is a weekly chart, otherwise you may have to buy higher. Thanks for listening. The normal Wednesday 6 PM session will be up and running, and then I will talk to you about the new Wealth Club service that's coming on stream very, very soon. Alright, thank you for joining me. Drop me a line if you haven't got access to the 6 PM review, and happy trading.